Greetings, this is Jeff Scott, and this is my weekend review. Actually trying to get it done long before dinner time today. And it is August 17, 2014. Let me fix this up on the slideshow. And there we go. Here's my long email address. It's also HGSIdoc@gmail.com, HGSIdoc@gmail.com is the short version. Title for today: Wild Ride on Friday after a strong week. Reminds me of a funny ride at Disney World. Mr. So-and-so's Wild Ride after a very strong week, and will news sink the bulls? I think you all know what I'm talking about. On Friday, I was out in the Intercoastal going out to lunch on the boat with a couple of my buddies. One day I'm up big, 1 minute I'm up big. Next minute I'm down big, and I end up a little bit up for the day. But major volatility, and it was because of what happened in the Ukraine, I suspect. As always, this is for educational purposes only. Any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker, and I am truly independent. I talk about a lot of folks that I admire, whose stuff I use, whose learnings I have kept as tools for me to use, but I pay for everything, and therefore I consider myself a clean independent. Won't spend as much time on this slide as normal because I have a lot to cover today, but you have to be your own guru and find those folks that are key influences on your style and develop something that is yours. I'll talk more about John Person a little later, but I really want to highlight this book, Mastering the Stock Market, is something that's worthwhile reading. Woodward and Brown, Alexander Elder, some of the people that I follow closely. O'Neill's book, How to Make Money in Stocks, his disciples, Gil and Chris, also great. George Lee, good buddy, a number of other things I use. I take what I've learned from these folks, whether from live meetings, individual training, books, and I try and put it into the style that I use for trading, which we'll talk about. I have a lot of tools. I don't need a lot of tools. I need something to trade with, and TradeStation or Thinkorswim are my preferred real-time platforms. Genesis Trade Navigator should be my preferred one, and as I get to learn it better, it probably will become my preferred platform. So much more powerful. Stock Market Group Analysis, HGSI, is what I do for my after-hours analysis. Someday soon, maybe intra-market, as the intraday tool should be available soon. I use EdgeRater increasingly for market timing, for sector analysis, for seasonality, and for individual signals. I'm a big seasonality fan. Historically, it's been best choice in Magenta Trader. I'll show you again some things on EdgeRater that have probably supplanted that. And then MarketSmith is sort of my backup charting platform for end of day and also for fundamentals. Always look at this, and I remind myself that it's really easy to make money when we break out into a new bull market. It's also easy to make money when you're in a clear bear market. The hard part is when you're on this hump and you don't know if you're rolling over or taking off on the next leg. And we have lived in this red circle, which says sell until it breaks above it and it's a buy. And so it's been a in and out trend followers nightmare market where every time it looks like the trend ends, it becomes your friend again and takes off. This pattern is reproducible by stocks, ETF, markets themselves, groups, etc., and is also fractal, as I find it, even on tick chart timeframes. Now, I use a number of individual what's the word I'm thinking of? Indexes that I put together, either myself or with my friends, to help me understand what the market is doing. The canaries were identified well over a year ago by Ian Woodward as a potential vehicle for looking when the market would roll over. And the canaries did roll over, as you can see in the picture, sometime in late February, early March, and had a fairly deep pullback. Almost a 50% pullback. Now, the canaries are almost leading the market again. Have not taken out prior highs, but they're getting very close and finished in a bullish week big upward, 1, 2, 3, 4, 5, from about 141 up to 144, 145. So a 2 or 3% gain on the canaries for the week. Everything is green in the technicals. Had a pocket pivot on Friday. On balance volume, which is my new volume surrogate, positive and trending upwards. Somebody asked me about how do I have more space on the right side of my chart. My initial was I don't know, and then I'll show you on my chart tool, but you can create additional days in HGSI, fairly simple. The LLURs we put together in PV, and the LLURs perhaps are indicative of much of the market that we see, where it ran up, went sideways with small pullbacks, a deeper pullback here, and now that 50-day may become resistance. So the LLURs had a spinning top, doji, whatever you want to call it, right underneath resistance on Friday. And my concern with the LLUR list is, and this is a surrogate of a more larger the market than these were the leaders in March than just the canaries. That's a concern across the market. Are we getting to resistance, and will the least path of resistance be down at this point? So that's a concern that I have. On the Florida Summit, the most recent LLUR list, we never broke the 50, and we are breaking out again. We had a PSAR reversal on Friday, although we did have a red candle. On balance volume is now positive, and that list has held up better than others, but it's the most recent list. And as I look through, I see a lot of stocks here that are still very attractive. Market themes. The bull theme, bull world did not blow up over the weekend. It's only for 141, so I have to put yet. Most indexes held up Friday despite the Ukraine concerns. S&P was down 0.01 or some silly amount. Key tenets of rising markets are still in place. Rising earnings, subdued inflation, and low and not rising interest rates. Now, that third button there is probably going to change in the next year, and that might signal it's time to get off the bull. But as of right now, although we may not necessarily believe inflation doesn't exist, it's still at a fairly low level, although even the numbers reported seem to be creeping up. The bear tenets or theme, sell in May and go away, still in force. Low volume volatility will persist, although back to school is coming in the next week. And the news will still whipsaw the market, especially now that most of the earnings are out. A little bit about what I do every weekend. I do my major chart review on Sunday. I always start with the top down because this is what's going to drive my decision making of what to do. And I do a top down review every day. I want to understand market direction. I want to understand who the leading industries are. And I want to identify the top stocks in leading industries. Now, I'll skip to that bottom button. I take the stocks that I find, and I want to make buy-sell orders based upon intraday and daily charts. Now, what I may do is have 30 or 40 stocks that get to my buy watch list, and I generate signals on these during the day using my various platforms. Now, on the weekend, I supplement my top-down review with a bottoms-up component. And I build my super watch list of fundamentally strong stocks, usually about 750. I look at each and every chart, and I look at both daily and weekly charts. This gives me the ability to understand the underpinnings of the market and to find strong setups. What I am personally looking for are undervalued stocks. I want a PE multiple at a discount to both the growth rate, current, and the historical PE if I can get one. I like to buy things near or at support, whether it's free parking, which is the 50-day moving average, the base, a pivot, or a squeeze. And I want to find momentum coming into my stock, such as a pocket pivot, a Bible gap up, a kahuna, high close doji, a person buy signal, or a mobile breakout, PSAR reversals, etc. And then once I get those signals, I'll go down to the intraday chart and make my buy. Some of my setups are so strong on an end of day that I might set my buy and stop based upon anticipated changes during the market day. The top part I do every day. During the week, I take that big list I've done and I look for signals with my various programs. And I add to that list with stocks that may come up on my top-down review. Future meetings, the Singer Island meeting with John Person, it's really his meeting, and I'm getting a chance to speak a little bit, will be October 12th and 13th. That is a Sunday and Monday. For those that are attending the John Person seminar, I will do a one-day HGSI only seminar as a prequel on October 11th. This will be separate from John's seminar. It will be at a nominal cost, probably around $200 to $300, depending on whether I feed you Saturday night or not. And if I can do it at my in the theater in my condo, that would limit me to probably 15 people, but it will be very comfortable, and it will be a great opportunity, just sort of a refresher for people into my prior meetings or people that were unable to attend. Email me at that email address for more information, and I am going to limit that to people that are attending John's meeting. October 3rd and 4th, George Lee's advanced seminar in Orange County, filling up quickly, and the PV meeting with Ron, Brown, and Ian, which unfortunately, because of my anniversary trip to Australia, I will not be attending, and then I'm working on another summit in February. This week, as always, I like to say, trade the market. We have not what we think we should have. Lots of pundits and talking heads. You do a Google search for market crash 2014, you'll find 400,000 different comments. Reality is we won't know what the market's going to do until it opens and what it's doing an hour or 2 hours later. As I write this, I'm still biased to the long side, but I have a short-term leash. If I look at the futures, futures have not opened yet. And you could see these are based upon Friday, 5/15, so I can't even comment yet. If the futures drop 300 points over hours on the Dow, that's a great opportunity to buy a bounce back in the morning. If they're up big, it might be too late to go further long. From my bottoms-up review, and again, news, I suspect, are going to whipsaw this. And so, bottoms-up review, big bio stocks strong, Gilead, Biogenetics, Celgene, Amgen. Technology still strong. That's a nice movement, and Avgo has won last week. REITs and utilities popping up again in our low interest rate environment. China is strong, has been strong. Just think about VIPS. How about CSIQ? Major move this week. I think it was up 33%. And energy is on sale. And the question is, will it have a bigger markdown in the weeks ahead? I mentioned seasonality. I like to keep an eye on seasonality. Now, what's really kind of cool, if you have EdgeRater, you can create whatever symbol list you want. So I've created a list here of some of the major ETFs. I have the different ETFs for the various major industries, retail, biotech, etc. I have country ETFs. I have small caps, big caps, and I try and see what's working at a given period of time. And what I want to look at are stocks or ETFs that have more than 4 or 5 years worth of data, and overwhelmingly one way or the other. So if I look at in this green box, looking at over the next 1 month from today, I see that home builders are up 8 out of 8 years, an average of 6%. Now, to be honest, the charts are underneath their major moving averages. They've come up some, but they don't look like they're breaking out to new highs. This tells me I need to pay attention. Retail. A lot of retailers blew up. Michael Kors, Kate Spade. But over the next month, 7 out of 8 years positive, up 6%. China, loosey-goosey the next couple of weeks. But as you look out over the next 6 months, 6 out of 7 positive years. Biotech remains strong. REITs, both international and U.S., strong, 11 out of 13 years positive. So the next month is strong for a number of our favorite industry groups. Always need to know the week ahead data and earnings per share. Here's a link, no cost. Not a lot of things here, but some big things. CPI is Interest is certainly tied to inflation, but you can see consensus of how low inflation is. Housing starts, crude and natural gas inventories between the 20th and 21st, home sales and claims, and Fed and leading indicators. So lots of information here that might move the market. Over here, you can see that the number of earnings announcements for this week is lightening up. Some do stand out. Jinx Solar, CSIQ moved the solars. JKS has less expectations. Hertz, they keep delaying. I'm not sure if this one's even on or not. I own some Hertz, and they've been very underwhelming of late and trailing Avis, although they had a nice day on Friday. Urban Outfitters, remember what I said about retail? TJ Maxx, Home Depot, Dick's Sporting Goods. On Wednesday, more solars, JASO, HP. On Thursday, Dollar Tree, there's sort of a pinball action around acquisition here, so who knows what that will mean. Clearly, we are slowing down on the earnings announcement parade. Now let's take a look at the chart and get an idea of what's going to back up some of my comments. First thing I like to do is very quickly pull up my trade station. Let's go into the elder indicators and see if the buying window is open or closed. This was a good stock this week, ACHN. We can talk about that later. So if I look at the NASDAQ, hanging man there, but green, and blue. So clearly the opportunity to buy on the NASDAQ is there. Hopefully it's early in the move. Here's the upper level of the envelope. What would be worrisome here on the NASDAQ is these red dots up here are bearish divergence on the weekly. You could see we had bearish divergence on the daily, and you could see we ended up selling off. If you look here, we're barely making a positive on the MACD histogram and on the MACD lines as we break out to close to new highs. So that might be something that we have to be a little bit concerned about as we go further. So that's something to watch. That's the NASDAQ, but with green in the weekly and the daily, the buying window is open if you would like to be buying. On the Dow, green, red, and blue, so a little bit less clear. We had the bearish divergences on the weekly and on the daily on the Dow, and as you can see, they have both sold off considerably since those initial divergences. Sort of a mixed here, daily green, weekly red, monthly blue. Probably wouldn't be running out to buy Dow type stocks. Now, for the weekly to change, probably don't need a big move. This is kind of cool with, find where that went to. It's on a different screen. Hold on one second. Here it is. The way that Elder put these indicators together, this here is the 15th. That was Friday. Now watch this crossover here. That will tell you the price that I've got to get on Monday. Oops. I've got to get about above 16,711 on the weekly for this to change colors. So on the weekly, on the Dow, we're about 48.9 points away from a turning blue. So that's not that hard to see that happen. So we'll be watching this. So less excited about the Dow. Let's take a look at the Russell. The Russell, like the Dow, had a pretty deep pullback, but it's green, blue, and blue. You can see that it too had bearish divergences that have worked themselves off. I think the buying window is open if you find stocks that you want to be buying. When I say the buying window is open, it just means you're probably not going to be shorting. You don't have to buy. The way that I've understood it, as Dr. Elder has presented and taught it is that sort of a filter. He won't go long if he's getting a red signal. He won't go short if it's green, and if it's blue, he can go whichever he prefers. Semiconductors had sold off a lot, and you can see that they're firmly in the green, blue, blue territory and worked off their bearish divergences that they had. The S&P 500, continuing on in the theme, blue, blue, and green, buying window is open. Divergences have been worked off. And the NASDAQ futures should look a lot like the NASDAQ composite. And you can see up at the upper envelope still has some bearish divergence. This is what gets worrisome when you start to see we're making new highs on price and certainly not on the MACD. So the MACD is actually getting lower as price is getting higher, and that's why we see a divergence. And you can see the red dot has formed there indicating that divergence. S&P 100, which has been the major component and what I like to short when I think the S&P is going to roll over, as I talked about a couple weeks ago, made a lot of money on those OEX puts, at least for a couple of days. This was the week, and we talked about them. Green, blue, and blue. All right. Another thing that I like to look at, which I should have pointed out last week, is a reason to potentially be bullish on the market. The Commitment of Traders report, I haven't looked at it for this current week, is a report that looks at contract buyers on various futures. And you could see here, you probably can't see, last week the professionals, the hedge funds, actually went long the market. This week they've gone short a little bit, just a tad, but the amount of negativity has certainly reduced on the professionals. And the reason why I like the Commitment of Traders is these guys are right more often than we are. And for example, when you look at the market in 08 and 09, this is on a weekly basis, as the market was selling off, the professionals were selling the entire way down until we got to 2009, where they started buying at the bottom in blue, and us amateurs in yellow, we started going short. So I like to see what the smart money's doing, and the smart money now has gotten pretty much neutral, although last week, as I said, I was surprised to see that they were actually positive. All right. I don't know why I put that stuff up there, but what the heck, at least most of it's green. All right, let's look at some of my Edge Rater reports that I do. Do I have this twice? That's okay. I had it open twice. There we go. All right. So I do a number of reports within Edge Rater and within HGSI to give me an understanding of how the market is doing. And this is looking backwards here. So let's look at end of week. So this is looking at from Friday the 8th to the 15th, buying closing price on Friday and closing price on this Friday. So this is taking the stocks that we may have picked last week, putting them into various watch lists and looking at performance. I look at it both from end of day, the prior Friday, to opening day of Monday. And what we saw this week is mostly black, very few negative groups. That's important. And then a couple of other things. S&P was up 1.22. HGS 100 was up 1.92. My holdings were up 2.43, which made me happy. IBD 50 was up 3.18. The GAF All-Stars were up 3.09. Now, mind you, it doesn't mean I was up that much or down. It means that if I bought an equal value, dollar value of each stock in my portfolio, that was the percentage move. I do that not to show off because I have plenty of weeks when I lose. I do that because I want to see how our stocks that we buy, growth stocks, compared to the market itself. And this tells me that our types of stocks are working. Interestingly, best stocks under 15, the Woodward Brown Smart Group was flat for the week. If I look at what was really working well, Tim Higgett filter, which is one that I use, Ian Point Score, top Robert Bongo stocks, technical strength, breakouts, squeezes, young guns. A lot of our favorite types of searches were doing well. So that meant our stocks were in vogue. We haven't seen a Hindi in a while. We didn't see one this year. Still way down on the new lows. We have to be above 2% to get anywhere close. On the bucketology, this is where we were about 2 weeks ago when I on this web video, I said we were probably within a couple days of a bottom. I haven't really loved the bounce, to be honest, but we were within a couple days of a bottom. We had one more day before the market turned. This is what bad looks like. This is kind of what neutral looks like, and that's where we're at today. Half the stocks above the midline of the Bollinger Bands, and half the stocks are below. I look at the markets. I see that we have a little bit of green, mostly yellow. So we're back in chop, and we'll be interested. I get no directional bias from this. I want to be long when I have mostly green. I want to be short in periods of red. This is what, cha-cha-cha, you can be long or you can be short in. This is chop, and we've been in chop most of this year. I'm not going to spend much time on it, but just to point out within EdgeRater and integrating with data in HGSI, I can create multiple different signal systems. These are some of George Lee's favorites, looking at breakouts and squeeze, whether it's Keltner channel, pocket pivots, MOBOs, and PSAR reversals. And we can do this whether we're breakouts or breakdowns on daily or weekly. Fans of Gil and Chris, code blue signals. Not a lot of stocks with kahunas, interestingly, and meeting the other criteria for code blue. But these will be some of the strongest stocks in the market this week. UPL is one of my holdings that had a big move. I didn't look at CF, but MOS, Agrium, so fertilizers might be in play. Stars is at a great buying opportunity. Taser has been beaten down, coming back up. We'll look at many of those. Code red would be the opposite way, kind of a neutral week, frankly. Not a lot of code reds or code blues. Working with John to see if we can't make this commercially available, but right now I've made it with Chris's help. It's just for me. And John and I are going to try and develop this and build his signals in so you can scan the market automatically. As I said, right now, we have not made a decision. It's John's decision about whether we make this commercial or not. But it's a great way of looking for high and low close dojis on multiple time frames, support off of pivot points, and also direction of on-balance volume. So hopefully more news for that in the near future. Seasonality, I can look at my favorite stocks and get an idea of performance over the next 2 weeks, 1 month, 2 months. If I look at 1 month out, I said biotech's going to be strong. Look at Gilead. Over the next month, positive 18 out of 20 years, return 9%. Gilead is one of my favorite stocks. It's one of my holdings. And you're probably aware it's right under $100 right here. It's just had a big move. I talked about this 2 years ago as my next sell gene, and it hasn't let me down. I could look at various funds, ETFs, for historical performance. This is a large one I look at that includes the kitchen sink, but I also like to look at the more moderate sized one that showed me the home builders, the retail, et cetera, et cetera. So a lot of power in EdgeRater and in HGSI, and they're kind of like goobers and raisinets. They go together in the same box, and I get a lot of value out of them. I mentioned Genesis, so I just wanted to show you why I'm such a big Genesis fan. So Genesis is a charting platform, and it's a charting platform that, like TradeStation, like Thinkorswim, etc., it's real time. It has a ton of built-in technical features, and like some of the others, like TradeStation, there's a pretty big army of folks out there that are fans of the program that are writing additional code. What I like about Genesis, it allows me to scan intra-day and end of day looking for signals. So I take a big user list and I scan it for high close, low doji, close dojis. I might scan them for many different types of buy signals. And then I'll take a look at them on the charts. And the nice thing about the charting is I can look at daily, weekly, intraday charting. I could use traditional charts like I use in HGSI. I can use, these are person pivots in his high close, low close doji and buy signal charts. It tells me when earnings came out and dividends were distributed. But what's really cool is it builds in seasonality. So let's take a look at Gilead. And I should have learned a long time ago, you never ask a question without knowing the answer. So I may not look smart, but I'm going to try this anyways. I'm going to find my Gilead, click on it. Okay, so remember how I just talked about seasonality is strong for Gilead? Well, this was the close of the week for Friday. And this orange line here shows me that I've got a 6% gain in seasonality coming between now and the end of September. So there's my 4 weeks. It's the same exact number. So they build in as a forward-looking indicator and let you chart seasonality. Nobody, I've never seen this before. Is that cool or what? Forward-looking seasonality. So it's the scanning, it's the indicators, it's the forward-looking seasonality. And then the other neat thing is people can share pages. And for example, I can go load shared pages and go into John's and import pages that John has done so that I have the exact same picture as he does when he's doing his webinars. Really a great program, not cheap. You can get free data from a lot of the futures brokers, which I use for paying for some of my data. All right, let's get into HGSI. And over the next 40 minutes, let's take a look at some top-down analysis. So I have to start with my bias. And my bias, because of all that green on the elder, is long. So let's go and start to build the case and then see what we want to do. Go into Major Markets Plus. Let's go to top down, which gives me mostly the last day and the last week. Ranked by combo. And where has the strength been? Strength has been NASDAQ, mid-cap, semis. Where's the weakness? Silver, gold, big stocks, the Dow. Russell is actually weak this week. Volatility was in the middle. Okay, 5-day performance. Semis, NASDAQ 100, NASDAQ up at the top. Dow Jones Transports. Don't like those bonds there. Volatility was down 16% over the last 5 days. That's why my stocks went up. Gold and silver were down a little bit as well. All right, that gives me a sense of what's working, what's not working. I look down here. I see that accumulation distribution. There are very few A's and a lot of red. That's not a good sign for the market. So let's take a look at my usual 6 or 8 charts that are important to me. So the first one I'm going to look at is the S&P 500. So we go. First thing, I look down here. There's no Phoenixes or Eurekas. There's no Kahunas or anything like that. So let's go to the clean chart and start to look. Now, interesting, I did this a couple weeks back, back here, and this is when, frankly, it's when I projected my OEX puts, and I looked at my targets. And we came right down here at the 38.2% retracement, and we bounced. I just love it when things work. And I made money on my OEX puts, which I spelled out exactly what I was doing when I did them. So hopefully some of you may have followed my lead. Thanks to Dave McMullen. Credit where credit's due. He's the one that taught me that stuff. We continue in a major uptrend. You know, it's hard for me to come on and be bearish, even though I'm starting to get more negative on the market. when you look at the S&P 500 and you see what we see here, which is since March 2009, a major uptrend. Since the pullback in 2011, end of the year, we haven't had a big pullback since the end of 11, 12, 13, and 14 are just big moves. Yes, we had pullbacks here in the fourth quarter of 12, the summer of 12, that we haven't seen anything similar to that. And everybody, including me, are looking for that pullback to that 200. I got to trade what I got, and what I got remains a very, 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 I don't want to do that one, my bad. What I've got is a market that continues in a pretty impressive uptrend and bounced off support going all the way back to November. And, will it take out new highs? And I think that's kind of where I'm concerned about is, is this it? But I don't know if this is it. And you don't know if this is it. And this is why you got to trade the market we have. So what do we have right now? We're at that 50-day moving average. That 50-day moving average is the kind of thing that can become resistance. If we break above that 50, then why won't we go and test these new highs and maybe give us a triple top up here, kind of triple top-ish up here, or double top. If we turn back from the 50, we probably go back and test this support line. I think we're at sort of a shootout of the OK corral, as Ian would say. My guess is short term, we take out the 50 and we head up and test new highs. But a failure at the 50 would be different this time. You look at these movebacks up, we got right through the 50 each time, did not struggle to get above the 50. That's going to tell me to be long or short. Right now, I'm at an interesting place. I look at the NASDAQ, and boy, this was my fib day, wasn't it? NASDAQ not quite at new highs. But remember, NASDAQ was the strongest one that we looked at, and right under new highs. Will the NASDAQ struggle here? This is a natural place for the NASDAQ to get turned back. It's been turned back here once, twice, and 3 times. So will we get a triple top up here? It's certainly a risk. We break above that, very bullish. So 2 indexes that were kind of the shootout at the OK corral. The Dow, weaker. It's not quite up to its resistance area at the 50, but that one's got the same problem. And as what I outlined before for all these indexes, what you could see, this is what's bullish. Test and go up again. Or do we see a failure and go down? And that's why this is such an important point here on all these major indexes. So hopefully I've got your attention here that this is sort of a paramount week. The Russell's failing at the 200. This could be a bad sign unless it opens up and gets across that 200. And now the Russell's going to have to deal with that 50 as well. So if I have concern about this market, it's really the overhead resistance. But I'm going to watch the market and let it make its decision. I'm going to anticipate, but I'm not going to be so arrogant that I think I know what it's going to do. Here is the VIX. Let's get more VIX on my chart. And you can see the VIX is not quite down to where we like it to get. It had sort of a shooting star. It tried to go up Friday on the Ukraine and close well below the 200. If the VIX closes below the 50, that will be bullish for the market. If it gets above the 200 there, that I would think would be bearish for the market. Gold and silver, let's look at the dollar. Dollar kind of teased us last week, traded up a little bit, closed, I think, down for the week a teeny bit. Let's look at the weekly. Yeah, it's a red candle, really flat for the week. It didn't do much at all. Dollar strength is bad for the market. That weekly is kind of important. You can see that we are still and a downtrend on the weekly for the dollar. Strengthening dollar, which you might see as we become the stable currency, and as you might see as we raise rates, would not be good for the stock market. Take a look at gold, sort of doing nothing at a place you might expect it to bounce at sort of a, let's bring the squeeze stuff in. In a squeeze, you can see the moving averages coming together. The PSAR is supportive. It's above the 200. Big volume on Friday. That might foretell, if that's even a word, foretell, who knows, a move up in gold coming. And if I look at silver, well below the 200-day moving average. It may be that some of the movement in gold was part of the fear trade related to Ukraine. Summarize, market's really at a point where a breakout could lead to new highs, but we're at a high risk of failure right underneath those 50-day moving averages. All right, next thing I do is take a look at what industries might be leading. So I go down to 05. Actually, I'm going to go into broad market for a second. I'm going to bring up the S&P 1500. The broad market are calculated from the underlyings. They're not reported indexes. And since they're calculated, they have volume. Interesting, we don't want that. We want the S&P 1500. Actually had more volume on Friday than the last couple of days. I think that's option expiration. And what I like to do is look at just some of my internals. This is a chart of new highs and new lows. And what I want to see is the blue above the red, highs versus lows cumulative. And I don't see that. Let me see. Yep, it did bounce above. That's bullish. When that's rising, that's positive. And then this here is telling me new highs versus new lows. Light green means greater than 0 and less than 65. Higher. Dark green, new highs, new lows are greater than 63. That's more bullish. And then rose would mean new lows more than new highs. So that's bullish. Let's look at accumulation distribution. We got the E's, the D's, and the E's turning down. A's are flat, B's and C's are turning up. You can see our accumulation still kind of D-ish there. We had a 3 to 1 day a few days ago. All right. So we had a cross of E's, A's above E's, which is good to see. And the A's and B's broke above their 10-day moving average, which you expect to see if the market's going to go up. That's a positive sign of the market. If I look at A's and B's plus D's and E's, we haven't crossed yet, but clearly we're going in the right direction. We did have a 5 to 1 day early in the week, or last week, the prior week. No 5 to 1 or 10 to 1s. And if we look at the stocks compared to their moving averages, we have quite a few above their 20. We still have almost half the stocks below their 50-day moving average. Certainly not overbought by any means. All right, now let's go down to industries. So we have 200 of them, plus I think there's an index of indexes in there. Let's look at the 2-day force up, and we see we're down to 55 that are behaving. The major industrials is just, and I should take that out of the list. It's made up of a number of different industries, but it's not what I want to be looking at. So let me see if I can do that. Probably should be doing this on my own time and not here. I'm going to delete that. And now I bet it's gone. Note to Jeff, don't do that again because it delays everything. All right. So I want to look at the top 10 very quickly. Renewable energy, I mentioned CSIQ, GTAT, a lot of solar stocks here. So let's talk about these for a second. CSIQ and Jinx Solar were really strong earlier in the year, and I think last year as well. And I've been bullish on this group, and I talked about CSIQ at my June meeting. Now, I'm a sucker for earnings. I've said that before. And let me get into my chart, which I changed today. I'm a sucker for earnings, and the earnings per share of CSIQ are just unbelievable. Look at these earnings per share changes. So CSIQ has taught me something. I still am a big believer that earnings per share matter. And I'm a big believer that long term, look at this earnings per share growth, 2014. On a multiple of 16, are you kidding me? Do you not think multiple is going to expand? Even if we get 16 on 337, that's a $48, $52 stock. All right. If we keep that 16 on a $4, it's $64. Long term, I think that earnings are the big determinant of stock price. But clearly, if one looks at CSIQ, you could see that it has been driven by other things and is sold off in March. Now, I've been interested in this stock because of earnings. And so I think what I really learned here is I could have stuck to my guns, not been in the stock, and waited for signals. And this was the day to get in. This was Wednesday, I believe, when it came out with earnings, closed on the high. You had this here is the kahuna. I switched around things a little bit, but we had the kahuna. We had a mobile breakout from the squeeze and a Bible gap up. My technicals turned green, and I broke above my 200. I had a PSR reversal, and OBV went positive. So I had every reason I have. So I didn't have to be holding it through a downtrend. Okay. So I guess to me that's what the message is. That earnings might matter long term, and I should build my watch list with earnings in mind, but I shouldn't buy in advance because of earnings projections. Everybody knows those already. Wait till they happen. If they're not in the price, there's probably a reason. Now, part of why I like on-balance volume, let me see if I can make this happen for you. I had a trend line here. I broke this trend line, okay? That was a buy signal. I broke above my moving average down here of the on-balance volume. That was a buy signal. So I get additional buy signals from OBV. So Canadian Solar, is it too late? I don't think so. I think it's a $60 stock in 18 months. Great earnings per share growth, but clearly driven by news such as tariffs and things like that. GTAT, talk about news. Opportune buy point? I think so. Broke above the 50, turning green above, more opportune back here. Doesn't look that exciting there. The reason why GTAT is exciting because Apple's already shown pictures of their iPhone 6 being with a GTAT built screen. So, kind of like CSIQ, 82 cents a share, going to grow 645%. Trades at a multiple of, well, there isn't one because it doesn't make money, dummy. Interesting opportunity, maybe. Number 2 on the list. I'm going to watch that, perhaps get into that. Why? Because I love this pattern, because I can put my stop. Let's take a look at price there. It closed at 1736. The high was 1743. If I play around a little bit. I just opened up a text document, but I have no idea where it went. Somewhere it went. Let me try this. Now, I think I had too many windows open. All right, so I'm going to have to remember things. So if I wanted to buy this stock, I could say, all right, if it takes, I'll put a buy stop at $17.45. It's 50 is trading at 16.45. The 8 is trading at 16.21. So let's say I put a stop in at 6.20. 17.45, 16.20. So we do. I'm with a calculator right now. Might be too big of a spread, but let's see. 1745 minus 16.20 equals, that's $1.75. Probably a little bit more than I want to give, but what a safe place to put my stop. So if I went to work and I wanted to be into GTAT, I would set a buy stop above the high on Friday. I'd set my stop below the 50, maybe at the 8, maybe at just below the 50. Why? Because I'm buying it because it's broke above the 50 with the PSAR support, etc. I feel very good buying a stock like this because if it trades below the 50, I'm stopped out. What have I lost? Out of curiosity, should have already had this prepared. I'm going to look at one thing over on my other charting package. And I like to look for a confluence of signs. And what I see here, interestingly, here's the traditional chart pattern breaking above the 50. Here is a daily. I have a weekly buy signal for my person's indicators. Don't like the seasonality. That would be one concern. But I'm going to put GTAT on my buy list. All right, the next one is the index. I don't usually look at anything below the index. So I right click, hit back. Exploration and productions. I said these are on a discount this week. One that I own is UPL. And you can see that UPL, if I can ever get my chart in here, had a hammer on Thursday, and then on Friday did a PSAR reversal, Bible gap or mobile breakout from a squeeze, gapped up, not Bible, below 200. It had a pocket pivot and a kahuna. It's got good earnings per share growth. It's got to get above the 50 and the 200, so it's got some short-term resistance. APC going sideways at the 50, had a mobile breakout signal on Friday, great earnings per share growth. OBV is trending down, but this is one that I will be looking at. Some quality names are Devon Energy. Really looks like it's putting in a bottom, potentially a short-term bottom down here, good earnings per share growth. Like to see it get above the 8-day exponential. Again, a lot of these have been in a pretty hard sell-off. Their OBVs have gone negative. And as I said in the beginning, they're on sale, but they may get even cheaper. Southwestern Energy, similar pattern, deep sell-off, trying to get back. OBV cross above, might be one to look at. So you might need more evidence that these are turning around. But as I said, they're on sale. Here's Diamondback. I bought more of this on Thursday or Friday, hoping that we're getting into a bottom, but that may have been early, but we'll see. So energy, top of my list, number 2, and looks like it might be putting in sort of a bottom. I don't get this list, other commercials. A lot of different things go into it. Doesn't mean much to me. Here's Ecolab, top on the list. Everything is green. Mobile breakout from a squeeze over here. Hate when that happens. A PSAR reversal here. Bunch of pocket pivots, on balance volume breakout. Looks pretty impressive from a chart. It's an expensive stock. All right. Back. Next group down is, this is a right click, back to get here. Let me try it again. Come on. All right. Next group down are beverages, probably driven by M&A. Not really M&A. Monster Beverage got a big investment, a couple $2 billion by Coke. They also did a trade of certain assets. Some of the carbonated things went to Coke. The non-carbonated at Coke went to Monster. And people just like GMCR now be waiting for Coke to be a big deal. You can see the big gap up, probably a little late to play that in my mind. Here's Coke. They got a big move off of that news as well. Just don't see a lot of earnings per share growth in Coke. Stars has been one that I've talked about in the past, and it's at what's been a good buy point. It's sitting on the 50, had a mobile breakout and a pocket pivot, rising on balanced volume on Friday, mostly green above. That looks interesting in this group. The next industry group, and I'll go through the top 10 very quickly. You've got 30 minutes to football draft. Midstream, a lot of this was driven by M&A stuff as the top four are all coming together in a new company. So let's just look at Williams Company. There's probably something here I don't understand, but I can tell you that I looked at the chart and it's one that made it to my buy list. The reason why it made it to my buy list is because it's Bible gap up, traded sideways. This was on merger or acquisition news, bought some assets. The 50 caught up to it and it's popping. And I love the pattern of the moving average catching up to price and price popping. It's got good earnings per share growth. Disappointing, it only pays a 2.9% dividend. Midstream has been strong, and as long as interest rates are low, they probably will remain strong. And there's been some arguments that even with rising interest rates, these will stay strong. OVTI had a big earnings per share. No, I think they had a takeout offer. I'm sorry. Early in the week, and you'll be able to see in the chart a big gap up and then sideways on Friday. So this one's too late. Intel, going sideways, moving averages catching up. Technicals look pretty good. Earnings are there. Hard for me to get excited about Intel. Pays at 2%, 2.6, but it's certainly a leader right now. Micron's been super strong. Concern on Micron is it's sold off some and it's got slowing earnings per share. I've got some of this. I have to decide whether I play it or get rid of it. I've got some married puts around that. I'm just not sure I'm a believer. Avgo, I have some of this as well. What I like about Avgo is it's going forward its earnings per share. But Avgo sold some assets to Intel this week, I think. Look at the earnings per share growth here. $5 with 30% growth, trades at a multiple 22. Take your multiple down to 20 times 52, that's $140 stock. $104 stock. It trades now at a little bit above 75. I like it. So does MarketSmith. That's why it's got the green bar above price. Skyworks, another one I like. Lower left, upper right, tight as can be. Bible gap up here, sideways, moving averages catching up. Had a pocket pivot on Friday, positive on balance volume. Next of the list, biotech. Here's my best friend, Gilead. 7.6% up for the week on a stock that trades at $100 a share, about $99.49. Will be interesting to see if it can break above 100 and actually maintain it, or will 100 become a high for a while. But it had a mobile breakout on Friday, pocket pivots galore, rising on balance volume. Sovaldi is a blockbuster. Look at the earnings per share growth. Still a big fan of Gilead, although I recognize some of the pricing concerns and threats that it caused. I also have a position, ACHN, which I took earlier in the week. After this gap up here, I bought in on this day, which was the 12th, which was Monday. And basically, I bought in because I came back in after it had this Bible gap up here, mobile breakup from a squeeze, gapped up, pulled back, met my criteria for buy, and I'm in. It's not in because of the earnings per share. They make a drug that is also a hepatitis C drug, and it's very exciting because when combined with Gilead's drug, it has a 100% cure rate for hepatitis C. So I think people are out there expecting it to be taken out by Merck or somebody, and that's why I'm in. I just know the story, and news came out, data on Friday, Bible gap up. I'll probably set my stop there and see what happens. But like I said, I'm already in the stock. Amgen, interesting, had bad news on Thursday, and then it traded up big for the rest of the day. That's a sign of strength, kind of a cup and a handle. Leader in biotech for years, maybe earnings per share growth coming back into the stock. Biogen had given us a buy opportunity off the 50. It's still pretty close, wants to go again. It's a big leader in orphan drugs. Celgene, you know, I don't know what to say, except Celgene's earnings per share this year have been kind of stagnant. They've been broadening out their pipeline, and they got earnings per share growth coming back. For a big biotech growing 33 times per year, 23 times per year, this guy's going to get to 100 as well. Celgene looks good to me as well. So a lot of biotechs to like. Right click, back. Integrated oils, again, at a discount. Petrobras is good in many ways. They've failed to deliver over a decade despite having great properties that are very attractive, but has had a big move since March. Pull back to the 50, Mobo breakout, Kahuna, pocket pivots this week. Looks like it wants to run from here, like that one a lot. From a bargain perspective, I looked at BP, kind of like the Devon and the others, pulled back pretty deep, going sideways. Has got earnings per share growth, pays a 5% dividend. It's a leader. It's at an annual low. No, not a high growth stock. Probably not a bad thing to buy and stick in your mattress if you still have mattresses and mattress stuffers. Next one on the list, oil gas services. So let's think about this. Energy had a bad week, yet 1, 2, 3, 4, 5 of the top 10 groups are energy related. That's bullish. So maybe this is just a pullback in an uptrend. So I'm a Halliburton guy, and I've got some married puts, so I didn't care that it sold off a little bit, although for the week it was up 0.2%. You know, this is a guy that ever since it died with the Horizon stuff, I think was it back here, I think. It's been on a tear from 30 to 75. Actually, the Horizon, I think, was back in this area. In the last 2 years, it's more than doubled and has been a leader. So has been Schlumberger, its twin. Got ugly here, which is why I took my married put position, sold off on Thursday, came back a little bit on Friday. Until this clears the 50, I'm not getting rid of my married puts, although it made the list of strong stocks. It has good earnings per share growth, pays a dinky dividend of less than 1%. Up at the top, most of these things have sold off. Growing companies looked interesting to me. It's ugly. It's a downtrend. It's not the kind of stock I buy. I call it bottom fishing, but it's got pretty substantial earnings per share growth, pays a small dividend, and looked to me, when I looked at it in more detail, that it was doing a big turnaround. Might be something to take a look at. Dresser Rand, a lot nicer looking chart, breaking out here with a mobile break, with a Kahuna and a pocket pivot. Force Kahuna, forces positive, looks pretty good as well. I think the point there is that a lot of the energy stocks have sold off hard over the last month or so. When you see this much strength coming in across so many groups, I sort of wonder how long these lower gas prices are going to be here. Last group of the top 10 is specialty pharmaceuticals. Salix, one that we've talked about several times, was up 8.8% for the week. I got too many windows open is my problem. Come on, give me my chart. Here it is. Nice uptrend, even with bad news. It held the 50, wants to break out again. The PSI reversal. Look at Friday. Kahuna, mobile breakout from a squeeze. Everything turned green and OBV crossed above positive. Looks great. Good earnings per share growth. Mallinckrodt is the new Questcor. They acquired Questcor in one of these reversions or inversions on taxation. Might be one to watch. I think this shooting star has to do with the transaction. Techmira, one of the Ebola plays that had its run, will try to run again. I'm not playing with that one. Allergan and Valiant are tied up with legal issues now. I just wanted to look at Jazz. This is the Bruce Brotov special, a stock that I've been in and out of. OBV broke above its moving average. You had a pocket pivot, PSAR reversal, out of a squeeze with a Kahuna and a mobile breakout the day before. Jazz looks interesting again. Time to go dancing. On the downside, whoops, not what I wanted to do. Back. On the downside, department stores, banks, precious metals, steel gave up some after being up for quite some time. But you see almost as many to the downside as to the upside, which is a little bit bothersome. Real quickly, a couple of my other screens. 5x volume, there was none. 3x, that's industry groups. Check that, go up to all securities. Let's real quickly run some of my scans. So on the 5x, Mandalay Media, and Monster Beverage. Monster we've already looked at, don't know Mandalay Media application software. So we can find out on that one. Sideways, PSAR flip, Kahuna, recent mobile breakout, makes money. Yeah, cheap stock, don't really care about that price stock. Hello? Hey, I can't talk, I'm doing a webinar. I'm going to do your draft. Goodbye, I go. The important call from Nicaragua. My son wanted to make sure I was doing his fantasy draft at 3 o'clock. 3X. You can see Gulfmark when the oil and gas stocks made it in, another beverage stock. Here's that Mallinckrodt and the Kinder Morgan, which is the merger and acquisition. I look at free parking within 1%, uptrends. Take a look at these very quickly to sort of supplementing my top-down approach. These are stocks in uptrends, pull back to the 50, that by definition have to have we say again, uptrend, pull back to the 50, it needs to have a force Kahuna. There's your Kahuna, and both forces are green. Agilent Technologies, not too exciting. Here's the Anadarko Pete sideways at the 50 with a force, a Kahuna and green forces, one of those oil and exploration. Here's another one, Hess. That's one of the things I like to do. Another thing I like to do is I like to find stocks that are close to a PSAR reversal in a squeeze that might break above. And you notice energy is all over the place. Sanchez was one that I liked as well. And then I want to look at the next one, show you my buy list, and say goodnight. Pull back. It's a little ways away from the 50, but the PSAR dot is right above it, so a little move up, it'll take out the PSAR dot. Great earnings per share growth. This is a small oil exploration play, and like Devon and the others, looks like it might be at a good bottoming position. The other one to look at, maybe somebody here can email me and tell me the reasons why I don't want to buy this stock. AGNC, I can guess they're probably very tied to mortgage collateral things that I don't understand. But what's interesting is this the one I wanted to see? Yeah, 11% dividend. And let me pull up their numbers here. I see the earnings per share taking a big move here. I don't know how those earnings really relate because they got to give the majority of the earnings back as dividends. But if you're growing your earnings that much, you could see MarketSmith has put a target up here, up at about 29. So I find this one to be interesting as well, AGNC. I like to just show you my buy list before I say goodnight. So let me pull that over here. My buy list is a compilation of my top downs and my bottoms up review. And you could always stop the video to take a look at that. Before I do that, I want to show you one thing I promised. And if I go into choose create view, highlight my view, go into view, I can tell you how many extra periods I want on the chart. So that's how I get the room to the right on my charts that somebody had asked me about. There's my buy list. We looked at the vast majority of those. And at this note, I'm going to go ahead and say goodbye. Have a great week. We'll talk to you next week.